Imagine working your entire life, paying into a pension, or investing in an annuity, only to find out, years later, that the money might not be there when you need it most. Scary, right? But it's not just fear-mongering. This is a real risk for millions of retirees. So today, we're breaking down the cold, hard truth. Is your pension or annuity actually at risk of going bankrupt? First, let's talk about pensions. Pensions are those old-school retirement plans where your employer promises to pay you a fixed amount when you retire. Sounds great in theory. But here's the problem. Many pension funds are underfunded. In the US alone, public pensions are facing a combined shortfall of over $1.4 trillion. Yes, trillion with a T. Some state pensions are funded at barely 50–60% of what they actually owe retirees. That means they only have half the money needed to pay out future benefits. But how does this even happen? Simple. Years of bad investments, unrealistic assumptions about returns, and sometimes, let's be real, politicians making promises they couldn't afford to keep. And guess who's left holding the bag? You, the retiree. You might be thinking, well, I'm fine. My pension is guaranteed, but is it really? There's an organization called the Pension Benefit Guaranty Corporation, PBGC. They insure private pensions in the US but, and this is a big but, the PBGC itself has faced funding issues. While they've improved recently, a major wave of corporate bankruptcies could still overwhelm their resources. Now, let's flip to annuities. Annuities are contracts with insurance companies where you trade a lump sum for guaranteed income over time. Sounds safe, right? Well, mostly. But annuities are only as safe as the insurance company backing them. If that company goes under, state guarantee associations step in. But here's the catch. They only cover up to a certain limit. In many states, that's around $250,000 per person, per company. So if you dump $1 million into annuities with one company and they fail, you might only get back a quarter of that. And in an era of rising interest rates, some smaller insurers, especially ones chasing risky returns, could face real financial strain. So, who's at risk here? Public sector retirees in underfunded states. Think Illinois, Kentucky, New Jersey. If you're in one of these, your pension could be on shaky ground. Private pension holders at troubled companies. Remember what happened to airline and steelworker pensions? History loves to repeat itself. Annuity holders concentrated in one insurer. If you've got all your eggs in one insurance company's basket, diversify. Now, I'm not here to just freak you out. Let's talk solutions. First, know your pension's funded status. Most public pensions release reports online. Look up your plan's funded ratio. If it's below 80%, that's a red flag. Second, if you have annuities, spread them across multiple highly rated insurers. Don't rely on just one company. Look at their AM Best, Fitch, Moody's ratings. Aim for insurers rated A or better. Third, consider private retirement accounts like IRAs and 401ks. Yes, they come with market risks, but you have more control. You're not relying on political decisions or a single insurance company's solvency. Fourth, keep an eye on state guarantee limits. Know how much protection you actually have in case your insurer fails. Ignorance is not bliss here. Finally, remember this. Nothing is 100% safe. But diversification is your best defense. Multiple income streams, a mix of assets, and informed decisions, that's how you protect your retirement. In summary, pensions can fail. Annuities can fail. Guarantees are not ironclad. But with smart planning, you can reduce your exposure. Don't wait until it's too late. Check your pension's health, review your annuity providers, and make sure you're not betting your entire retirement on shaky promises. Because at the end of the day, your retirement security is too important to leave to chance. Let's see how many of you are actually keeping an eye on this. If you found even one thing helpful, smash that like button. It tells YouTube to show this to more people who need it. And if you want more no BS financial truths, hit subscribe and turn on the bell icon, because I'll be covering topics that most people don't even realize could wreck their retirement. Remember, your money deserves your attention. Catch you in the next one.